So Bitcoin and crypto continue to pull back. And the big question is, why is this happening and when is it going to stop? Well, in this video, I'm going to go ahead and break it down 5 things that you need to know about this Bitcoin and crypto market pullback. And this is going to make you a better trader and investor so you can beat the market. And not only that, I'm also going to break down my strategy for buying Bitcoin and crypto, where I'm going to buy and how I'm going to do it. So keep watching till the end of this video. I'm going to go ahead and break it down 5 things that you need to know about this crypto market pullback. Now, the first thing that you need to understand about this crypto market pullback is leverage and liquidations. So first off, what it means is that a lot of traders not often just buy Bitcoin by itself, but they use borrowing, leverage trading to 5, 10x, 20x their positions so that they can multiply their gains, of course. But the problem is, of course, is when the price goes against these traders that they end up getting liquidated. The exchange closes their positions and it takes their money. And so why does this matter? Because we saw one of the largest liquidations in crypto history just this past week with $1.5 to $1.7 billion in leverage positions wiped out in less than 2 days. Now, basically, that forced selling creates a domino effect. One liquidation triggers more selling, and then that knocks out the next trader, and so on. So oftentimes, when we have that much open interest in the market when it comes to leverage trading, the market gets quite volatile. Now, the second thing that you need to know about this crypto market pullback is the Fed, inflation, and interest rates. Now, as you all may know, that the Federal Reserve recently cut interest rates in September, and that was the first rate cut that we've had for a long time. Now, the thing about these interest rate cuts is that inflation and the economy data are still being watched very closely. Now, if inflation stays sticky or high, the Fed may slow down future cuts. And there have been a lot of talks about the current sticky inflation. And some are even questioning whether or not the Federal Reserve is going to cut rates in the coming months. And so why does this matter? Well, whenever you cut interest rates, money becomes cheaper, which people can actually borrow more money when money is cheaper. And when that happens, more people borrow money and they put it into crypto, Bitcoin, and risk assets like stocks. And of course, if you don't cut those rates, investors are not going to borrow and actually put more money into risk assets, meaning that prices can't necessarily go up. If you think of it like this, kind of like how money is like a faucet that flows water into risk assets, rate cuts turn the faucet on just a little bit more to allow more money to flow into those risk assets. Now, the third thing that you need to know about this current market pullback is the options expiry. Now, what the heck does that even mean? You just need to know that people just don't buy Bitcoin. They also buy and use options contracts that actually bet on future prices. And every month, these contracts expire. And what you need to know, though, is that this month's options expiry is very special. That's because it's the largest options expiry in crypto history. That is over $23 billion worth of contracts. And what does this have to do with the crypto market pulling back? Well, that's because the max pain effect of this options expiry for this quarterly expiry, analysts estimate that the Bitcoin's max pain for price is between 107 to 110K. And that is the price where most of the options will expire worthless. And why this matters, of course, is with so much money on the line, big players have an incentive to push or pin prices around those levels. Now, this creates short-term volatility and can drag Bitcoin down into that zone leading into the expiry. Basically, like the best analogy that we can use is like a tug of war between bulls and bears. Now, the fourth thing that you need to know about the current crypto and Bitcoin market pullback is macro and policy risk, with the big news of the government shutdown risk for the United States of America. Now, markets are jittery as the chances of the U.S. government shutdown has jumped to over 60% on betting markets. And a shutdown adds uncertainty. It delays data releases and it pushes investors into that risk-off mode. And we've also recently had strong economic data that has come in as well. We just found out that the U.S. economy grew at 3.8%, which was higher than originally expected. And with the unemployment rate holding around 4.3%, that actually reduces the pressure for the Federal Reserve to continue to cut rates in the coming months. And as I said earlier, not cutting those interest rates can actually hold back risk on assets such as Bitcoin in the crypto market. And let's not forget about the ETFs. Now, the initial excitement that we saw with the Bitcoin ETFs earlier in the year has actually cooled off a bit, and inflows have actually slowed down with both Bitcoin and Ethereum ETFs. And a lot of buyers actually saw that as a safety net, which makes people think twice before they buy into Bitcoin and Ethereum. Now, the fifth thing that you need to know about the current crypto and Bitcoin market pullback is the market has been overheated and profit taking is taking place. Now, you can't deny that the bull market for crypto actually started back in early 2023. That was 2 to 3 years ago. And with Bitcoin hitting up to over 120K, there are people who bought Bitcoin at $15, $20, $30, $40,000 that are taking profits now that are up massively. Not only that, but some of the largest and oldest Bitcoin whales have actually started to take profit in the millions and billions of dollars over the past few months. Now, even though price hasn't crashed a ton, there has been a significant pullback for Bitcoin and there's been no growth or buying. So the sell pressure has continued to kind of wane down on current buyers. And basically, the Bitcoin and crypto market is like an auction. Price has to get to a point to where people want to buy and bid. And unfortunately, that could be a lot lower. Now that you understand about the options, expiries, liquidations, profit taking, you're probably asking, when should I buy Bitcoin and crypto? Now, when it comes to buying crypto and Bitcoin in a pullback like this, it can actually be quite scary. You don't want to catch a falling red knife. Basically, you don't want to lose money. So let me go ahead and make it easy for you, as you can take 3 approaches to buying Bitcoin. And those 3 approaches are the technical setup approach, the confirmation approach, and the scaling approach. Basically, for the technical setup approach, we can go ahead and look at a Bitcoin chart. And really what you're saying here is that I'm not going to catch a falling knife. I'm going to wait until Bitcoin finds support. And that could be anywhere between 108 to 110K. Now, if 108 actually breaks, we know that the next support is possibly 103 to 105K. Now, this is based on technical analysis in horizontal levels. So you can take the technical setup approach, put bids between 108 all the way down to 105 and 103K. And the absolute lowest that I believe Bitcoin can go is down at the weekly 50 EMA that is closer to under 100K, which is around 97 to 98K. Those are areas that you can take when it comes to placing buys or bids using a technical setup approach. Now, the next approach is the confirmation approach. Now, for me, the buy signal isn't just a cheap price, it's confirmation. I want to see Bitcoin reclaim higher. As I always say, I want to see the market prove itself before I buy. And that tells me that sellers are done and I can buy with confidence. So if you want to wait for the market to prove itself, you can go ahead and wait for Bitcoin to reclaim up above the 113K level. And if you want even more confidence, you can wait until it breaks up above 118K. Now that is the confirmation approach. Now, the last approach is the scaling approach. And a lot of you have probably heard of DCA, or dollar cost averaging. Now, with this approach, I'm not trying to catch the exact bottom here. I'm just slowly buying over time, even as the market dips. So I can go in looking at a chart here at 110K. If the market goes down to 108K, I can buy a little more. I can place a bid at 105K, and I can slowly scale in over time, knowing that my buys as this scaling approach happens to be for long-term Bitcoins. This is me buying and expecting Bitcoin price to be much higher over the next 6 months to a year. And this actually works really well for a lot of people because it takes the stress off. And those are the potential targets for Bitcoin price where I'm going to buy at. And again, you can use multiple ways, multiple approaches to buy Bitcoin, whether it's through technical, through confirmation, or scaling in over time. Now, the biggest thing is here is you need to understand these approaches and you need to understand the reasons why the market pulled back. And that's going to help you be a better trader and investor in the coming weeks. Now, if you found this video helpful, I want you to share it with a friend. Share it through social media, share it anywhere, share it through text. Hopefully this information will help as many people as possible, so make sure to share it. And don't forget, if you're not following the channel, make sure that you do that. Each and every week we have more videos on crypto trading in investing, and I love creating content for my fellow crypto investors and traders. So make sure to share the video, and if you've not yet seen the previous video here up above, you can go ahead and click that as well and watch that too. But with that said, you guys, I hope you have a great rest of your day. Trade safe, and I will see you on the next one.